Hey everybody, it's James from WealthQuest. Today we're going to talk about taxes. Specifically, how do we do tax efficiency in retirement? Tax efficiency has become such an incredibly popular buzzword, and a lot of times it can be confusing because it means so many different things to so many people. Particularly if you are a high income earner, you can fall prey to a lot of misleading direction when it comes to tax efficiency because it can cause us to focus on taxes today. That all you need to worry about is paying as little tax as possible now. The problem with that is that it means that you're probably going to pay more taxes later if you're not careful. So things like pre-tax contributions to 401ks and IRAs, yes, you get a deduction now, which is valuable to high income earners. The problem is, as we've mapped this out for clients over the years, the tax rates don't necessarily decline that much when you're retired, and if you delay all of that tax into the future, you end up in a high bracket then too. And so what we want to do is actually create a bunch of different tax treatments for retirement. And we want to think about your tax rate over the rest of your life, not just right now. What that ends up meaning is today you make contributions to things like Roth contributions, whether that's 401k or individual Roths. It means that you may look for opportunities to make Roth conversions where we take pre-tax money and we actually pay tax on it now in order to avoid paying tax on it later. This can really apply if you've had an income reduction this year in the midst of all the COVID stuff. So there are a lot of opportunities to pull those tax costs into today, even though they feel high, in order to smooth the effect into retirement. Because when you retire, if we have some money that's tax-free coming from Roth, some that's taxed coming from pre-tax contributions like your 401k, and some that's just general brokerage account money, we can mix the distributions from those different sources in order to have the most tax-efficient retirement as possible. It is incredibly important to do that planning now to make sure that it's efficient in the future.